How you doing, guys? Today's video is about VAT, and I wanted to do this video because I wish I would have seen this before, and hopefully it's going to save you a few quid as well. So when I first started and when I registered for VAT rather, I didn't understand all the implications of registering for VAT. On one hand, I kind of understood what it meant, like at a top level, like you're basically going to charge an extra 20% on all your prices and your customers are going to pay for it. But I didn't understand the input and the output VAT. And as a result, that cost me maybe £15,000 in a VAT liability that I hadn't anticipated. So I'm hoping that by explaining the concept in a just normal, down-to-earth way, you'll be able to maybe avoid them mistakes and not get caught out like I did. So, what is VAT? Oh yeah, by the way, I'm not an accountant, and this isn't like financial advice. This is just for my own experience with VAT and sort of what it means. So VAT is a value added tax. So essentially nearly everything that you buy in the shops has 20% added on to it. Like when you're buying products, for example, baking goods, things like that don't have VAT. Some products are exempt, but for exterior cleaning business, if we're supplying our services, there is a 20% VAT amount added, and this can have quite interesting consequences if you're dealing with the general public versus if you're dealing with a business. So when you become VAT registered, if you're a window cleaning, pressure washing business, and you're mainly doing work for your typical client on the street, your homeowner, Mrs. Jones, Mr. Smith, when you become VAT registered, if you were charging £100 and then you become VAT registered, you've got two options. You got one option is to keep your prices at 100 quid, and pretty much 20 quid is going to go to the VAT man. So you're going to be out of pocket once you become registered for VAT. Or the other option is that £100 price now gets presented to the customer as 120, and you're not in a better position now. You've just had to basically collect 20% and pay it to the government. So the bit that I didn't understand was, what is all this benefit about being able to reclaim the VAT back? So just on my board here, I just wanted to show you the input and output VAT, and I'll just show you in a simple way. Okay, let's keep it simple. So we've got the VAT man. This is a guy, quite fat, kind of greedy. And then we've got input and output VAT. So we already know VAT amount, value added tax, is at 20%. So what does this look like? So we've got two components basically. We've got input VAT, output VAT, and then the amount that we have to pay as a business owner for collecting that VAT that has to go to the VAT man. So here's what it means when people say, like, this is what I get to do. I get to reclaim the VAT back. So you become VAT registered. What does this mean? So let's say you buy fuel. Let's say, just as an example, you had £12 worth of diesel. On that £12, there's 20% VAT there. 20% of that, the VAT that's on that price, is basically 2 quid. So there's 2 quid in VAT that you've incurred. Now that's the VAT that you've had to pay when you've bought products and services. Output VAT. So let's say you sell one of your services it used to be 100 quid, but it's basically 100 quid plus VAT. So that becomes 120 quid. The 20% VAT segment is basically 20 quid. So the amount that you now owe the VAT man is the sum total of all your output, VAT, 20 quid, minus the input VAT you've incurred, which equals 18 quid that goes to the VAT man. Output VAT, 120 quid, which you've charged the customer. Basically, 20 quid of that is VAT, minus your input VAT, which is the VAT that you've incurred when you're basically buying stuff. And output VAT is the stuff that you have to charge when you sell stuff. The difference between your output VAT and your input VAT is what goes to the VAT man. So something to consider is that when you get to when you turn over, so you sell £90,000 worth of products or services, you have to become registered for VAT when you go over that amount. So then you have to be VAT registered, because in the eyes of the government, if you're producing that amount of money, you're a serious business, and basically we can get you to contribute to the economy, essentially. However they want to, however which way they want to call it. So if you're going to have a big business, you're going to have to become VAT registered. If you're just going to be a guy on your own through a limited company, you might want to consider if you want to become VAT registered or not. And I want to show you what the implications would be from the perspective of a customer, and how tricky it would be when you're competing in a marketplace where maybe you're VAT registered and your competition isn't. So that's something to consider. If you're dealing with a business, if you're selling your services to another business that's VAT registered, it's actually a little bit more advantageous that you're VAT registered, and you're still going to be able to get the same amount of money in your pocket. But if you're going to be selling to Mr. and Mrs. Smith, the average homeowner, and you're offering your services with VAT on, and somebody else isn't VAT registered, you're basically adding an extra 20%, and it's not really an advantage for them. So you just got to make sure when you're at that stage, you're good at what you do. So I just want to show you what it looks like. Okay, so let's say you now want to clean a driveway and you want to essentially exclude all your costs and expenses. Let's say you wanted to add £1,000 into your bank account. A business that's not VAT registered can just charge the customer, Mr. and Mrs. Smith, £1,000, and £1,000 of revenue, like sales revenue, goes straight into their bank account, and then all they've got to do is minus their fuel and expenses, business expenses. The business that's VAT registered, that's dealing with Mr. and Mrs. Smith, has to charge £1,200 to put £1,000 in their bank, because once they're VAT registered, 200 quid has to go to the VAT man. So when you're competing in a market and you've got two people offering exactly the same service, and there's a business that's not VAT registered and there's a business that is VAT registered, the business that is VAT registered is at a disadvantage when they're dealing with a homeowner. Now, when it comes to working for a commercial business and you're working with businesses, it's not any disadvantage, particularly for them to work with a business that's VAT registered, because they're able to use the VAT that you charge them to actually reduce the VAT liability that they have, which actually helps the business pay the VAT man less money. So, you know, if you're doing commercial work, it's probably very advantageous to be VAT registered. But if you're doing mostly commercial, if you don't have to be VAT registered, it's probably in your interest not to be VAT registered. That's just my experience. So the mistake that I made was that when I registered for VAT, you can backdate when you want the registration to start from. So I had a guy working with me and we were doing all right amount of money, and I needed to backdate my VAT start date. So it's July, and then I said I needed my VAT to start from January because I'd gone over the threshold. But what I hadn't done between January and July is increase my prices enough to account for the VAT. So pretty much when my VAT liability came through, they did the calculation, which was the input VAT, the VAT that I've paid on stuff, minus the output VAT. And then I had this liability of basically, it was like 14,000 and something. It was just this big liability. And that was a big mistake. I hadn't charged enough for my services, and it just became this liability that I had to pay. So yeah, when you're getting to that stage, just definitely understand the difference between input and output VAT. It's actually not as bad as you think it is. It's actually can be an advantage that I found. I think it's when you're dealing with a business, they prefer to deal with you being VAT registered because they can reduce their VAT liability. And yeah, I just wanted to do this video as like a normal video to show you like what is VAT, and you've got the input VAT, the bit that you pay, minus the VAT that you have to charge when you sell your stuff, and it's the output VAT on the stuff that you sell minus the input VAT on the stuff that you've bought, and it's only the difference that goes to the VAT man. So like when you buy a van that has VAT on it, there's a big chunk of VAT that you're able to, if you've got all these sales and you've got all this VAT to pay, or when you've just bought a van that's got a big chunk of VAT that you've paid on it, you deduct that from the VAT that you've had to charge to your customers on the sales as well, and it's the difference that goes to the VAT man. That's it basically. Understand this idea a little bit more. So yeah, when it comes to doing your VAT, your bookkeeper can help you keep on top of this type of stuff. So how it works for me, just so you can figure this thing out, is I have a card where the money comes in, like my sales, and then I buy stuff, and then the bookkeeper once a quarter will then send me like a checklist of all the items that are on my bill. A lot of it is categorized, like when you buy something from, let's say you buy something from me, Hero Soft Wash, or you buy something from Amazon and stuff like that, you can categorize what it's for. So let's say it's for parts. Let's say you bought a soft wash system, or you bought a pressure washing calculator. Maybe not that one, but let's say you bought soft washing equipment or fuel. That will be categorized on that checklist, and then the accountant will see how many sales you've made, and then they'll deduct the VAT from what you've paid on stuff, and then minus from the VAT that you've had to charge your customers. And then any items that they don't recognise on your statement once every 3 months, because that's when you file your VAT, you'll just go through it and say, yeah, that item there that she wasn't sure on, yeah, that had their VAT registered and that had VAT on it. And then at the end of the month, you have basically a VAT liability to pay. And then they will submit your VAT return for you. And then you basically just bank transfer the money with your unique VAT reference number on it, and then it's just like paying a bill, and that's how you pay the bill as well. And then that's how it looks when you're every quarter getting sent a statement from your accountant, bookkeeper, that tells you how much VAT liability you have to pay. That's pretty much how it looks. I hope this video is useful for you, and if you found it useful, check out the pressure washing calculator, because we have a VAT calculator on there, and I'm just going to show you it now actually. If you are going to charge a customer a certain price, you know how much of that money is essentially yours. It's not super accurate because you're going to be able to reduce the VAT that you have to pay through the input VAT, but just gives you an idea. You charge a customer 1,200 quid, how much of that is yours? It's only 1,000, etc., etc. So yeah, it's just another thing that we add inside the pressure washing calculator, among other things. Just continue to make it better and better. Check it out. It's on the Apple Store and Android too. Peace.